Okay guys, so today's video I'm going to talk about why I stopped trading gold or XAUUSD. If you are a subscriber of the channel, the recent videos over the past year or so, you'll see that I mainly trade GBP USD. And in this video, I'm going to talk about the reasons why I switched from solely trading gold to now only trading GBP USD. The videos on my channel 3 years ago, I was trading gold pretty much every single day, and it was the only pair I actually traded. I've done numerous videos speaking about this is why I trade gold, this is the benefits of it, and the main benefit to actually trading gold is the increased volatility. It moves hundreds and hundreds of pips per session, and that's obviously, if you're a day trader, a scalper, this is perfect for you. You can get numerous setups every single day, and it's just very nice pair to trade overall. But I'm gonna give you 3 reasons why I actually switched to solely trading GU in this video. So we're going to start off with the time zone and the trading session in which I was actually trading gold. I was trading it in New York session, which in the UK is just past lunchtime, just past midday. And this meant that let's say you wake up 7, 8 a.m. You have 4 hours, 5 hours until you actually trade the session. This meant that if you're planning on doing something that day, or let's say you wanted to go out, play golf, for example, you'd either have to play before, really early in the morning, or you'd have to play after, like 5, 6 p.m., which, as you know, right now it gets dark at like 4 p.m. in the afternoon. And it's just not really great to do anything outside of trading, and it kind of takes up your whole day. Whereas if you're actually trading only one pair in the morning during London session, this means you can wake up, trade the session to let's say 12 p.m. and that's a good 4 hours. If there's no setups, you can obviously call it a day, maybe 9 a.m., 10 a.m., 11 a.m., which then gives you the full day to do whatever you want. If you want to go play golf, if you want to go play tennis, if you want to go do whatever you want, this is okay to do because you're not going to be waiting for a setup. You know, I see so many people, they trade London, New York, Tokyo, and this just means that you all day you could find a setup. So you could be waiting through London, New York, not see a setup, and then be like, oh, I'm going to go to the gym now. But then you could miss your setup because it's still valid for your entries, and you just don't get in the trade because you can't spend the whole day looking at the charts. This was the same thing with me with trading gold in New York session. A lot of things happen. Let's say you get a delivery, you can't enter the trade. Let's say you're eating lunch, you can't enter the trade. Whereas if you do it early in the morning, you have that focus and you can just enter, boom, be done, and you're not thinking about trading for the rest of the day until the next London session. If you're trading GU in New York, it gets to the point when in the morning, you're always thinking for those first 4 or 5 hours of your day, how am I going to trade gold today? How am I going to trade? Am I going to be able to make profit? Am I going to be able to recover my losses from last week? You're constantly thinking about that all day until that New York session. Whereas if you're trading in the morning, you wake up, trade, boom, it's done. You don't overthink anything what you're actually doing whilst trading. So the second point of why I stopped trading gold was because it is too volatile for my risk currently. Back in the day, you know guys, when I was doing the Telegram group, the good old signals group back in the day, I was trading gold every single day. You know, I'd have a setup every single day. And this was amazing. But once you get to a certain point with the capital wise, you don't really want to be risking $1,000, $2,000, $3,000 every single day that you're trading. Main reason, let's say you're trading 25 days of the month. Let's account for weekends, of course. If you're risking 1% every single day, you're exposed to 25% risk of your account. If you have a 100K account and you lose every single trade, which could potentially happen, if you have a 75% win rate, technically you could lose 25 trades. Obviously they won't all come at once, but if you lose 25 trades, 25% of your account is gone. With gold, it's very easy to find setups every single day, so it can be tempting for people to enter all the time. So the main reason why I switched to GU from this was because GU doesn't move as much as gold. You could probably catch a couple hundred pips every single day on gold. And if you're looking at setups on GU, there's not going to be one every single day. And even if there is, you're not going to be able to catch as many pips. It won't even probably hit your take profit majority of the times in one single session. So the volatility is obviously a good thing if you are trading with smaller accounts or you have a high risk tolerance, because with trading smaller accounts, to make the same profits and the same returns as you would someone trading on a 6-7 figure account, you're going to obviously have to make 10 times as much. So This is what I was doing back in the day with the account flips. I was having to take more trades, obviously risking a little bit more than you would usually risk, just to make the same returns as someone with a larger account. Let's say you're trading with prop firms, trading less is obviously better, and that's why I kind of went away from gold. The volatility can be good, but with prop firms, with spread, slippage, it just wasn't great at all. You know, I had some occasions where I'd be risking 2% and I'd end up losing 5-6% just because of slippage on the prop firm. This doesn't happen a lot on GU unless you are trading during a news event. If you're trading during news, you can obviously get those massive 50, 60, 100 pip candles within a matter of seconds. And this is the same with gold as well, obviously, but gold can do this normally without news being released. So you can get these massive candles because of gold has obviously a higher spread, and it can happen pretty much any time of day. You can get crazy slippage, which means you can blow funded accounts and you can just lose unnecessary money that you wouldn't normally lose. And the last point of why I stopped trading gold is it's less profitable than GU based on my trading. So obviously for some people, gold is going to be way more profitable than GU. When I was backtesting, and obviously this is something you should continuously be doing, let's say you're trading multiple pairs, multiple setups, multiple timeframes, or even times of day. You know, people trade certain sessions, but they also trade like the kill zones. So like 8 to 9 a.m. they'll trade, and that's where they'll find their entries. But I was testing gold when I was just trading gold, and also GU, because I wanted a pair to trade in London session. So I was like, okay, maybe I can trade both of them. But then I came to the realization that GU was so much more profitable for me than it was for gold. So the way I actually found out this was I was using FX Replay, and you know, there's a link in the description. Go check out FX Replay, the best backtesting tool that I've actually used. And what I was doing was using the same setup, the same time frame, the same entry style on gold as I was on GU, because there's no point bringing something brand new to a new pair in your testing, because if you know it works, why change it? But then side by side, looking at the results, GU had a higher win rate, the average risk to reward was higher, and overall, over the months, there was more profit. So I always preach about on my channel how if something isn't as profitable as another thing, to just eliminate it from your trading strategy or your trading plan. And this is simply what I did. So it had all the characteristics of a great pair for me to actually trade. Had the lower volatility. It had lower volatility, but the volatility that it actually did have was mostly during London session, which is when I ideally wanted to trade. And that was the main reason why I actually started backtesting GU in the first place anyway. The fact that it was more profitable kind of reinforced the fact that maybe GU is the best pair for me to actually trade. So once you've actually found this out, the next step isn't just to go full out trade GU, completely eliminate gold. It's not ideal. So what you want to do is slowly introduce it into your trading. So maybe start forward testing on GU instead of just doing nothing during London session. So you go on the charts, 8 a.m. Instead of actually entering the trades, you put your risk to reward tool on your trading view. This is what I would take. If I was trading GU, the plan is set up perfectly to enter this trade. End of the day, end of the session, you come back and look, okay, what happened with this trade? Did it win? Did I have a high drawdown? Maybe my entries were off. Maybe I got stopped out and then it went to the take profit. What happened with this trade? The main reason why you want to do this is it's pretty much like backtesting, but backtesting is all good and everything, but you don't see it live in the markets. The best way to actually learn how to trade is through experience in the live markets. Anyone can be profitable during backtesting because you're just pressing next candle, next candle, next candle. Whereas if you're trading live and you're actually testing the setups live, that's what you're going to see when you bring it to a live account. So before you bring it to a live account, test it forward testing. Is it profitable? Are you seeing the markets the same as you were 5 months ago or 6 months ago? Because obviously when you do back testing, you don't test last week, you test a year ago, 2 years ago. So before you bring it to a live account, test the forward testing and then introduce it to a live account. Maybe with lower risk or on a separate account to your main normal trading account, and then slowly bring it up to your normal trading and introduce it as another pair alongside the main one in which you're actually trading at the time. This is what I did with gold alongside GU, and obviously the same as the backtesting, GU became more profitable, and that is when I started switching to just trading GU. It just meant that you have so much more free time in the day, and it gives you opportunities outside of trading. Let's say you want to start another business. And if you're trading all day, you don't have the time to actually do this. You don't have the energy either. If you've just had a couple losing trades or a couple weeks in a row where you haven't really had great results, and then you want to start a business, it's going to be quite tricky because you're going to be down and stressed anyway. If you're only trading one pair, very few setups in a month, you're more likely to succeed in stuff outside of trading as well. And the main benefit of actually trading GU over gold that I actually found was I could use a fixed risk to reward. So it meant that I could use a 1 to 3 with a 10 pip stop loss, 30 pip take profit every single time I enter a trade. Whereas with gold, I was having to use my stop loss below the previous wick or above the previous wick, which had actually happened because, as you guys know with gold, with the volatility, it can just spike to fill a previous wick and then return to normal. But with GU, 10 pip stop loss every single time works a charm. If you guys have any comments about, let's say you trade gold, or maybe you stop trading gold, leave them in the comments down below, and I'll catch you guys in the next video.